For crypto, it's 90%. So we've basically got a factor that's so powerful that nothing else matters. Brilliant. So then let's take the NASDAQ. We divide it by Bitcoin. It's down 99.97%. So you kind of get one asset allocation only, which is crypto, which is bizarre. In a macro world, we now think you need concentrated portfolios as opposed to diverse portfolios. Look, here's something interesting, because 2017 was a big cycle for assets, as we know. This is a super accelerated easing of financial conditions going on that's driving M2 and driving the dollar. I don't know whether that's going to make it more powerful, different. I mean, it's hard to be more powerful than 2017, but that was early adoption phase in crypto. So this cycle is going to continue, and it has to continue. You know, the size of what's happening with global M2 and the dollar moves and stuff like that are very big. So no reason to expect that the move in asset prices is probably more than people expect.
Raoul Pal says this crypto cycle is bigger and faster than 2017, driven by rising liquidity and institutional investment. Unlike past retail-led rallies, big financial players are now leading the charge. Bitcoin is up over 600% since 2022, but Pal believes we're still early. He sees a pattern where gold, M2, then crypto move in sequence, pointing to more upside. If trends continue, crypto could become a $100 trillion market.
So this is the really big picture of what we look at. It allowed us to understand there's only two assets to own. And then we got to a further realization, which is, okay, if 97% of all of NASDAQ's price action is driven by debasement. It's the strongest factor we've ever had in any macro regime in history. Okay, great. That makes macro super easy. For crypto, it's 90%. So we've basically got a factor that's so powerful that nothing else matters. Brilliant. So then let's take the NASDAQ. If we've got one force, one economic force, we take the NASDAQ, we divide it by Bitcoin, it's down 99.97%. So you kind of get one asset allocation only, which is crypto, which is bizarre. In a macro world, we now think you need concentrated portfolios as opposed to diverse portfolios. In fact, diversification just destroys returns now because you've got one clear macro factor. Working on the business cycle and the various components of all of this, how it comes together and where we are in timing of that. This cycle, people are starting to get it. I think once we get through a pause that refreshes, a contraction in liquidity, the cycle, I think the next cycle, everybody's going to go all in and realize it's the kind of end of times, because we just don't know what's beyond that. Nobody does. And anybody who says they do is lying. They keep shifting the game. The game was the balance sheet. We all knew the game. Then it moved from the balance sheet to the Fed net liquidity. So then everyone's working out the TGA versus the reverse repo. Yeah. And then they went, actually, it's total liquidity because we're going to stuff it into the banks. And now the next one is they're going to stuff it into stable coins. All they're doing is fine. I mean, that's Scott Bessen's job, and Janet Yellen's job was the same. They're bond salesmen. They're just, they're masters of the universe bond salesmen, and their job is to find where to absorb this, and that is all part of the M2 growth. We kind of know directionally that M2 plus the net liquidity things explains 90% of all price action. Is one more powerful versus the other? Well, financial plumbing people can argue that all day. I don't think it kind of matters, because what we're trying to say is, if they do that, does number go up? Because we're investors as opposed to economists. What we have found is there's this nice phasing between financial conditions that lead everything and a hack for everybody who can't calculate financial conditions. We use a regression between the dollar, bond yields, and major industrial commodities. But actually, a piece of work that we just did recently that quite surprised us, gold is real-time financial conditions. Everyone's like, what drives gold? Suddenly we're like, we've seen this chart. Julie and I were like, something, and gold actually leads everything because it's actually current financial conditions, which kind of makes sense, right? It's the most sensitive to financial conditions. Then you've got the move in liquidity and markets, and the ISM kind of comes behind that. So there's this nice way that you can look at things to give you an understanding. So we all know, in fact, everybody on Twitter now knows that Global M2 leads crypto by 3 fucking months. That chart will be the death of us, as we know.
You guys have created a cult.
And it'll fall apart at some point as well, and then we'll be the worst people in the world. It's ISM. So there's a nice kind of understanding of where this goes, which allows you to forecast stuff because, again, there's one dominant factor, which is so easy. I remember before having to figure out all the variables of what was driving Brazilian rates, and nobody cares.
Raoul Pal believes the current crypto cycle is much stronger than 2017, powered by increasing global liquidity and growing institutional interest. He notes that major players are entering the market, and key indicators like M2 and gold are signaling further upside for assets like Bitcoin. With Bitcoin already up 600% since 2022, Pal thinks we're still in the early stages. If the macro trends continue, he sees the potential for crypto to grow into a $100 trillion market.
We're in the third year of a 4-year traditional cycle. And you're going to say, and so if we look at those orange bars, be it fall, 2013 was a great year. 2017, that was the year Bitcoin did a 23x off the January lows. And you're like, all right, well, 2021, what was that? And that's what Raoul and I call, Bitcoin's truncated cycle. And that's, again, where we are today in 2025, but not truncated. Why? Well, because what happened in March of 2021? Liquidity, this is the net liquidity flow, peaked in March 2021 and went down in a straight line as basically everyone tapered liquidity flow, right? Guess what else peaked in March 2021? The business cycle, right? Whereas when we're looking at today, right, so liquidity's growth, like looking at a 12-month flow, is basically just turned positive, right? Which is, you can say BOJ, ECB flow. And then the ISM is still, below 50. And then had we been sitting together, doing something like this back in March 2021, this is what we would have been looking at. So the ISM was at 63.8, and our forward-looking indicators were saying that the ISM was about to go down in pretty much a straight line. Well, this is where we were back then. Here's where we are today. I'm just going to do that one more time. Where we were back then and where we are today. So we're in a very different environment. This is basically suggesting that like Q2 of next year, the ISM gets to, let's call it the mid 50s. And so the point here is that because financial conditions have eased as much as they have, Felix, even with rates stable, dollars come down, which is the dominant factor in this index, at least, given the size of the move, it's actually extending. We believe it extends the business cycle outside of what a traditional 4-year cycle would be. And what we also know is that if this is right, and the ISM moves to, let's say, the mid 50s by, call it Q2 of next year, well, that once the ISM gets above 50, right, and then moves into its sort of late cycle peak, call it anywhere around 60, this tends to be where we get these really big moves in risk assets, and crypto included. It's also where we see alt season happen, right? Which is really what people are saying win banana. And the win banana, we're up 600%. The banana zone is not a 1 month get rich thing, right? It's, Bitcoin's up 600% since we hit a low in Q4 of 2022. That's, been a steady banana zone, but the question then is, when is the next leg? Well, we'll get the next leg as the ISM progresses towards 55, because the thing to think about this is just like a credit spread, right? It's just like small cap versus large cap equities, which once you get into Bitcoin, which ETFs will be the large onboarding there. You got to think about that as like the way I think about that is like the gateway drug to crypto. So even if you're making, good money in Bitcoin, all of a sudden, if you're already orange pilled, right, and you're seeing something going up like Pepe or Bonk or Sui or Solana or whatever it is, you start to recycle those tokens very similar, like you'd be taking profit from a large cap growth equity at the bottom of the cycle and recycling it into small cap value and EM equities. Does that make sense?
Yeah,
and so
totally.
The economy's in a very different place, and the forward setup in terms of financial conditions looks good, but then also liquidity's rising. Okay, so here, again, total liquidity, the 6-month flow is actually broken out of this kind of the range that we've been in. And that range that we've been in explains a lot of what has basically driven these knee-jerk reactions in crypto. The trend has been higher, but there's been, periods of time like the first half of last year, or even, the first quarter of this year, where basically we were just, kind of stuck in a range, which feels like that again now, but it's not the case, I don't believe. But so we still think here's as we call it, the most copied, chart in the world when it comes to Bitcoin. But I still think that the point with this, and Raoul and I have said this repeatedly, even though, you've got people on Twitter who are monitoring this tick for tick, it's not about that. It's about the direction of travel and the fact that the trend rate is still growing. And when you then look at the year-on-year comps, it's just kind of another way of thinking about this or looking at this. And I think that this very much paints the forward setup. So yeah, when you compare, as I say, the 2021 cycle versus the situation that we're in now, and we've both said that liquidity and the business cycle are the two most important drivers of risk assets, and that also applies, to Bitcoin and the entire crypto universe, that these two elements are going to head higher over the next, let's say, 12 months, whatever. Into Q2 of next year.
Raoul Pal sees this crypto cycle as bigger and faster than 2017, driven by rising liquidity and growing institutional demand. With Bitcoin already up 600% since 2022, he believes we're still early in the move. If current trends continue, Pal thinks crypto could grow into a $100 trillion market. He says this is just the beginning of a much larger wave. Are we still early in the crypto bull run? Can crypto really reach a $100 trillion value? Share your thoughts in the comments.